Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Towards the music. There we go. We got everything. Camera's a little bit too high. Hold on. How about that? Did the Christmas party this weekend, took the camera, didn't even use it. Everything got all screwed up. I did some music, so that kind of screwed it up. All right, guys. Well, this week is the week. If the market is going to move, it is going to be in the next 2 weeks. And the amount of volatility that we're probably going to see here is going to be unreal after a pretty tight week. I actually was a little bit quieter than I thought we might get, but wasn't like we didn't know that it was possible. It was just, I thought that they maybe would take some opportunities to position themselves. They didn't. So let's come over to the charts and just kind of see where we're at right now. I am getting that it's time to switch over ES, so I will do that here in a second. So here you can see on Friday, there was a bit of a sell-off in the treasuries for, I don't remember why, actually, to be honest with you. But now they're kind of coming back up. I think that going into this FOMC, we're likely to see some selling, though. All right, both this morning and tomorrow morning, people hedging themselves against what the Federal Reserve might do. Now, going over to ES, they also had, a bit of a sell-off there, recovering overnight. Oil trying to climb itself out of the hole, but I don't know if this one's gonna run. I mean, it's kind of made the attempt many times and failed, right? Gold and silver a little weak this morning. Copper also just slightly weak. Then we've got Bitcoin. After having taken, a jump before the weekend, it's now on the weekend come back down. And the dollar showing a little bit of strength, but coming back down here this morning, down below 105. Now, of course, the risk here is that if the Federal Reserve is super hawkish again, that we see that dollar come back with some strength. So all right, so I need to switch over the ES now. It's interesting that I still see a lot of volume in December, but let us switch it. ES, and we want to go to H23. Let's see here. Wow, it not recentering right away is not a good sign. That there's a lot of, well, I don't know. Actually, it's kind of weird. Maybe. Let's see here. Let's check comments first. Hi and good morning. I started the day with a very bad sore throat and it still continues. Oh dear, that's not good. Oh, there we go. Okay, so there's more activity over here in ES, but there's not actually more liquidity, which is kind of interesting. You might see those ES be more active than normal because of all of the volatility events we have this week ahead of us. I think I need to get a different cord. Get the one that's springy. Okay, camera's still too high. How about that? That's better. Much better. And let's make sure it's like everything's centered, shall we? There we go. All right, well, I should note that we are having about 5,000K net selling in the 10-year treasuries. I'm seeing it across the board, and I'm seeing flattening. 3.55 is where we're at on the micros. I'm willing to bid that. Not that I think that they'll fill me there, but... Okay, well, that's making the spread come in. Looks like the 30-year is seeing a little bit of volume coming in there, but if we're flattening, I would expect to see more buying in the 30-year, so I need to discount that. See if it drags the other two up with it. Maybe that selling is just like an opening trade and there's not much behind it. I do see them trying to buy there at 07 and running into a little bit of an iceberg, right? There we go. It wasn't giving me the little hand. I'm like, what's wrong? What's wrong? I really hate seeing a 5-tick spread. Oh, I didn't even look. Oh yeah, mission saying that you had a sore throat. I hope that you don't have like the flu or RSV. Okay, so it's fighting them holding a bit at 07, but it looks like they are going to hold it. And there's another tick up. Still no volume in micros so far. Looks like it's gonna tick back down. Let's just remember it was the '07 that there was the big iceberg, and '07 half was the kind of the continue through price. Oh, let's see here. I did not realize the U.S. Treasury will auction off both 3 and 10-year notes today. I might need to think about that one a little bit more now. Really having an auction the day... Oh, they kind of changed the Treasury Direct website. Oh, you know what? It must not have loaded correctly or something. Well, let's see here. List of upcoming auction announcements. Okay, there we go. Okay, so yes, I see here 3-year and 9-year 11-month. Not 30-year. Tomorrow, 30 years. They gonna have a 30-year auction day before. That's interesting. See if this now for the one that's today, offering amount 32 billion. The one that's tomorrow is not very much. It's only 18 billion. There's another uptick. I'm kind of looking at the 10-year here, noting that there's no volume over there, and thinking like, okay, should I be the first one? Well, if I'm going to be the first one, I think I have to be getting a really, really good price, and I don't know if it's turning out that way. I got something on my eye. I guess I need to like put the air filter in here and clean it out a little bit again. While I was going through the beginning, I was just looking, I was like, everything looks pretty quiet. And I was looking down the list. Biggest winner, natural gas, wheat. Natural gas, man, it was up like 10% over the weekend, because basically the whole United States is getting hit. Yeah, we got a pretty decent amount of snow last night. And you know what? I haven't gotten any phone messages from the school. So that's gonna be fun. Liverpool, if you want to come in Hawk specific stocks, this is probably the worst stream to come in and try and do that, because nobody's going to come and see you mention a particular ticker and go off and buy it from this stream. We're trading treasuries and equity futures.
Just seeing according to CoinDesk here via Twitter sources here saying that...
Morning, Octavius. How are you doing?
That Binance have refuted the earlier report on possible charges by the US Department of Justice. Binance created a quote-unquote anti-money laundering department in 2021. Say that the
reason, it sounds to me like the reason why Bitcoin is down overnight is that Binance... There's a rumor that Binance is going to be charged by the Justice Department. Binance refuting the rumor, I think in that instance, like, I wouldn't trust Binance, but I also don't think that if charges were imminent that it would be leaking like that. Well, maybe if it was like, if they've already Binance already kind of knows that it's coming and stuff, could be. And they would still lie about it. Are we gonna get another up? Are we gonna take 8.5? Looks like some iceberging at 08 again here. So I don't know if I should make too much of that. It looks like they're kind of like negotiating here. There are some people that want to trade, and they're just kind of meeting each other. Although it is the bid that is being, or the buyers being forced to hit with market orders. Okay, so the micro treasury yields have come in considerably there now. Just test the robots there, no reaction. I'm also wondering, I mean, the overall flow has been to the downside. I'm wondering, is this enough for me to flip, to kind of change my mind about that? No, not even close. It is a decent amount of volume, but there's kind of been some both ways, so the cumulative delta hasn't really changed much. Let's see here. What's this guy in the interest rate channel saying? With the way markets are right now, I prefer bond indices. They move slower and, in my opinion, are way less manipulated and volatile than indices. While some people would consider this bad, I like it because I'm way less emotional when trading bonds. The moves are more predictable, in my opinion, as well. I agree with a lot of what he's saying there. I definitely think that the bonds are more predictable. There's just a lot. I don't know if I think you could say that the treasuries aren't manipulated. Like, manipulated is probably the wrong word, but it's not a fair game we're playing here, right? That's interesting that there's nobody bidding there at 546. That 15 lot looks like it wants to get filled. Okay. So somebody just crossed over there at 549. Treasuries did tick back down. 07 is bid again. I don't know if I like the right there, but yeah. Okay. Look, they traded the 15 lot. So I was correct. He did want the fill. That was maybe actually a bit too much. Somebody else decided to go for it. There's like a 1 lot there, but then it turns into a 6 lot. I think that if I were to hit it, that it probably wouldn't go so. It looks like it's heading up again. That's low resting liquidity at 08 both sides. Okay. Okay. Now the bid and the offer are both fairly thick. Interesting, the micro uptick there. $30-year just kind of 30-year looks a little eerie there to me. This action is interesting because it does look to me like speculators are getting involved here. And also, I'm a little bit suspicious now though, because it looks like everybody is kind of on the same side as I am. Which is that they think that rates should be rising. But that hasn't exactly been the price movement here this morning. I thought so. I think the micros maybe should have come down a little bit more on that uptick, but seems like a lot of tussling around for 4 ticks, huh? Well, I felt like the retail traders in the micro futures were positioning themselves long, and now they're already underwater. And 09, touching 09 is a breach of the range as well. And a sizable amount buying there in the 30-year. Well, I guess I'm glad that I never got a fill on any of my orders. Feel a little nervous, guys. Somebody tried coming in and scamming people on the Discord this morning. A little bit more buying coming in there again, although the 30-year has pulled back a bit. Spread widening here again. You see, that is a little odd. Iris IQ tweets, China's grain production has shrugged off devastating droughts, floods, and a cornucopia of zero COVID hurdles this year to register another bumper harvest, according to official figures. Okay, interesting that the yields did not shift off of that. Well, there's a good opportunity right there at 544, but looks like he crossed over. Like if I really wanted to market order hit buy, that would have been the perfect place to do it, right? Pick somebody off and immediately have at least one tick. But I'm really weary now about taking a position. I mean, I came in here thinking, oh, we could take a tepid trade short on the treasuries, right? But the way that this is played out is making me feel a little bit more cautious. There's an interesting downtick. The problem here is that it might, if it turns to the downside, it might do so real fast. Yeah, see this guy that got filled at 4-3 already underwater, right? And would have to pay up 5. You don't want that. So that makes me really, really nervous about any kind of market order. So I might be forced to do it here. Okay. Yeah, that was okay. Interesting. The 5-year seems to be leading, so it looks like it's flattening again. The 10-year lagging just a tad. Some other orders came through with me. We'll see here. I mean, it did start to, the short volume did start to come in there, but like, look, it's not following through. I'm kind of questioning if this is actually going to go anywhere. $17 goes bid. Yeah. Okay, so man, that turned back up just as quickly as it turned down, didn't it? It is a tight range, isn't it, Octavius? I like that move right there immediately puts me into, this doesn't look like there's actually that strong of a flow coming through and that it's just market maker shenanigans, right? Although the trend may be tilted to the upside. I mean, that's a good solid uptick right there, right?
Japan is said to join the US's push to tighten chip exports to China. So again, Japan is said to join the US push to tighten chip exports to China.
To lose 10 ticks, and how long was I in that for? 2 minutes? Good grief, man. That's very discouraging.
So just looking into this piece then, as Japan and the Netherlands have both agreed in the principle to join the US in tightening controls over the exports of advanced chip-making machinery to China. This is according to people familiar with the matter, a potentially deliberating blow to Beijing's technology ambitions. So the two countries are likely to announce in the coming weeks that they'll adopt at least some of the sweeping measures that the US rolled out in October in order to restrict the sales of advanced semiconductor manufacturing equipment.
Well, interestingly enough, I wasn't the only one that got in there, but I was the only one that decided to puke. Yeah, and the other thing was it only, I guess I didn't ever even register a favorable excursion. Which has kind of been the trend over the last week, hasn't it? So it again makes me feel like the market is trading against me here.
To the effective Fed's fund rate, 3 spots.
So if that is, I mean, it could just be the, me falling for whatever market maker shenanigans are going, and it's not like watching for me specifically. But if that is kind of what's happening, then what I need to do is I need to be looking for a bigger trade, right? Like that was a little bit too much of a mess for me to have gotten involved. Need something where like there's really something happening. All right, well, there's the others puking. 12, 16. See, that matches up with most of it. There's the uptick into a new high. Well, while I've been watching that, the ES has kind of been all over the place, hasn't it? I mean, it did fall a little bit. So once again, I'm seeing the long volume come into the 30-year, but not the rest of the curve. Scott Adams is retweeting somebody that claimed that they made a deep fake that was like pro-US, I guess, and the video was banned, and then complained that there's anti-American deepfakes all the time. Scott Adams says TikTok needs to be banned as China controls what we see and controls our minds. And I do kind of wonder, because I'll make videos and some of the responses that I get on my videos are really like people don't seem to watch the video. They're just like a complete lack of understanding about what they're talking about. It's really weird. I get like, there was this one guy who I stitched because he was complaining about inflation and stuff, right?
Between Indian and Chinese
and companies raising prices and being quote unquote greedy. And I was like, well, when you're getting demand pull inflation, that's exactly what happens, guys. And so I explained the basics of like how you go into inflation, like that there's demand, there's cost push and demand pull inflation. Like that's like basic stuff. Like if you go and you take Series 65 exam, they test you on that stuff, right? And he's like, why are you and the only thing he said in the video is like, why is he complicating the argument? Because it's like these are like simple things to understand to even have the argument, bro. Man. And is it the world is really this dense, or is TikTok trying to put their thumb on the scale a little bit? I don't know anymore. I don't really feel a whole lot of interest in fighting it anymore, though. Think we could see a little risk off if ES falls out of balance? I'm not sure, dude. I would have to say, just based on the treasuries moving the way that they did there, that we did get a little bit of a risk off move come in, didn't we? I'm a little surprised. Like I said, I'm and it could change, like it could shift, like, and right now is a time period where maybe we could see a shift, but it's also like, okay, here's the 7 o'clock move and it looks like it's to the upside, right? But I really thought that we would see buying coming in today, selling in the treasuries, and that's not what's happening right now. So who am I to say what the S&P 500 is going to do? The flows are not are confusing me. When we had that little bit of upside, I was like, oh, I'm so happy that I didn't get filled. Then I feel like I kind of like avoided the thing, and then I still got suckered in, didn't I? Rose up a little bit, thought I had a good spot. Actually, the actual take that I did was probably okay. Like I don't think that the execution of it had anything to do with it. It was just the wrong trade. See, those treasuries aren't backing off either. Oh, the 5-year appears to be having a little bit of trouble making the next step here. I guess we'll have to see. 12.5 was kind of like prices from before the open. We'll have to see what they do after they touch that. If the flows shift at all. I wonder if the 10-year is maybe feigning weakness there, but okay. Well, there was another uptick, but it didn't hold. The 30-year went though, man. Maybe, you know, I thought that people would be coming in and trying to protect themselves for the FOMC, but maybe people are making a dovish bet. So I am seeing the volume come into the 10-year now. Market orders come in, right? So that I think I'd have to say is they put the squeeze on and people puking out now. Well, that kind of makes it difficult for me to try and jump on board this up move, because it makes me skeptical about how much further it could go. The 30-year definitely broke its range, though. It was like 20 was their range. Man. Okay. Not much volume on it, but a downtick. I'm still seeing over here the spread is flattening. Could that have been like a push and pull? Like you push the 30-year up because you want your offers in the 10-year to get filled, right? Because you're buying the 30 and you're selling the 10. So you pull this one up, and then you take the passive. You passively sell on this one, and then everybody pukes into you. You're filled, and note like it just kind of like falls back really easily. post meta order impact. Except for that, I didn't really, I don't know. 30-year might not be done. It's the problem, right? Note the imbalance in the micro futures. We've got 91 lots sitting at 534, 535. So just a little bit away. When you look at the bids, there's like 6666747. Whereas on the offers, there's hardly any offers at all up there. So these do look a little bit weak. They're waiting for the, oh, there you go. It's like it looks like they're waiting for the 30-year to down tick, and then sure enough, 30-year down ticked, and then they both win another tick. Recenter things. There was definitely more selling in the 5-year than the 10 or the 30. The 30 hardly sold. 10 is only back like 4 ticks. So it's a flatter. So flatter would probably suggest higher rates. But we'll see if it actually goes. Forex Live tweets volatility compression exhausts the crypto market. That's interesting. I've never thought of it like that. The volatility is definitely compressed / come down significantly in the crypto market. Yeah. Is that stressing people out? Maybe you're used to it being super volatile and now all of a sudden it's not. Okay. So they're kind of like taking tepid sells, but not a strong offer behind it. They probably want the 30-year to tick, and there you go, 23. If they can tick 22, then that might shift the technical picture. Looking out across the board here, we got about 15 minutes before the S&P 500 gets going here. We are in a little bit of an uptrend in the S&P 500. The treasuries do appear to have possibly reversed here, although it's still tepid. Could just be a pullback, and the 30-year hasn't ticked 130.22 yet. Would be kind of like a key spot for new swing low in that. Do you see cryptocurrency market maybe bid a little bit? Other than that, pretty quiet. And the most clear thing I can see, like the most clear read I can make, is that the treasury market looks extremely tilted to the flat side. There's a flattener on, and that has stayed throughout all of this. They came up, 30-year went more, coming down, the 5 years moving more. It is a flattener. So VVW discovered, wow. So you discovered the channel yesterday and you're already coming in and seeing a live stream. That's awesome. Oh, it's so close. Come on. You need a bigger offer than that. Oh, what? Nobody's offering at 23, huh? Okay, so I think we got to be a little suspicious about that one. I suppose it could just be because of the flattener. But those curious that nobody even puts out an offer, huh? It's not very often that you see the spread widen that much in a treasury future. That usually only happens in super tight, quiet action. This doesn't feel like that this morning, but I guess relatively speaking, it is relatively quiet. There's 22. Ten minutes to the open. Not sure what that was. It looks like a bunch of things shifted there. And then uptick in the 10-year. Spread in the micros widening. For the ES? It does, well, okay, so now that we're getting close to the open, it does look like the liquidity is shifted over to March. In March, they're putting up 300s in a few spots. This certainly was not what I expected when I came in this morning. I expected December to be a ghost town. But I guess they got the volatility this week. You know, they're willing to trade the old contract. Yeah. But I mean, when I was looking at the previous one, I was looking compressed too, right? So when I was looking at the other one, they were putting up like 150, 200. I guess the thing is the liquidity still kind of sucks across the board, but it is better. It is better in March. I tell you what, when you look at the compressed DOM, doesn't it kind of make you think like maybe they should do a 4-to-1 split on ES, right? And just to the nearest point now to fix the liquidity over there. Nah. I don't know if that would actually make business sense for them. In fact, if I'm the CME, I'm probably concerned that those 0 day to expiration options are so popular. That's probably stealing a lot of their business, huh? Okay, so I'm seeing a little bit of steepening come in. That's the strongest steepening that we've seen all morning. Look at that, 3 ticks up in the 5-year and nothing in the 30. I'm still getting a crazy spread here. So interesting, when I saw that, it was like the book changed and I thought, okay, maybe it's pivoting. The 10-year is basically where it was. It was just the spreads shifted. So that was kind of weird. And I can't even put a finger on what it exactly was that I see shifted, but it was just like all of a sudden the bids and offers all kind of turned. And that the 30 years actually starting to lead the way down. I don't know about that one. And look, 23 looking a little weak. I feel like this has been the longest 10 minutes ever, right? Okay. Has it been 10 minutes? It's been 15 minutes for me. Well, if they do come down and they get like 09 to go offer, I guess we'll see if there's more interest in market selling here this time.
Choppy trading. WTI crude futures up by $1.
What's this? FX macro retweeting Doomberg. Feels like Binance bought enough former government employees and will escape charges. This leak to Reuters reads like it was from a disgruntled prosecutor who was outraged by the corruption. New task force. The following year, Binance began a recruitment blitz. It hired at least 5 ex-officials from the IRS Criminal Investigations Cybercrime Unit, including a new global head of investigations called Tigran Gambarian. Binance said Gambarian's team would detect and prevent crimes on the platform and work closely with law enforcement. 35 ticks. Are you on oil, Sophie? The oil is definitely moving. I just heard something on the news squawk saying they were up. They actually moved a whole dollar here in the last few minutes, it looks like. But it's really choppy trade in oil. Oil doing well helps us if we're looking for higher rates, though. I don't know if it helps us too much, but can't hurt in this situation, right? That one's interesting. So I will have to go back and read that article later. I do feel that it seems like the cryptocurrency world is falling apart and government and prosecutors are asleep at the wheel. And it does make me wonder if there's corruption out there. That the cryptocurrency market has captured the regulators, you know? That would be awful if that's really the case and that continues to get stronger, you know? Because you basically like you shift into a market that's even more captured and corrupt than the current one. Okay. So the 30 years still kind of looking happy to just stay at 24. Thanks you, sir, for taking the time every morning to show and explain what's going on about treasuries and futures. Oh, thanks. I appreciate that. You started to read the No BS basic course. As a newbie, I'm not sure what you're doing and I'm waiting for it yet, but I will eventually find out if I continue to value every morning. Well, I really like the No BS book. Every once in a while, I'll go back and read that book. I don't like to necessarily use his setups. Like, when I started doing it, I would use the No BS setups, and I said, okay, that means that it's time for me to buy or sell, right? I don't look at it that way anymore. Although I will try and like catch the edge or icebergs when I'm executing, right? I'm more kind of trying to predict the order flow and using what I'm seeing here on the DOM and kind of the signals that you would see on No BS as kind of like tea leaves per se to see here coming along, to try and get a feel of where it's going. Okay, that was maybe a significant downtick there. 10-year leading the way that time. Not a breach of the range yet. So you gotta, the big thing you gotta remember, Luke, the thing that I think everybody misses is that the market is more statistically efficient than it is informationally efficient. And so retail traders ignore the fundamentals and the news and so forth to their own peril. Well, it felt like it was looking really good there for a moment, like 2 ticks down, and now we're visiting the other side of the range already.
Sunday and Monday.
And that time it was a little bit more volume in the 30-year. And the spread in the micro yields came in a little bit. How could anyone, well, I have to say that on every stream because anybody that's new, they've never heard that before, right? So the whole thing, you got to remember the world. What is the world that Seth lives in, right? What is Seth's day-to-day experience? Seth's day-to-day experience is he goes on Reddit and he talks about these things, and everybody on Reddit is like, no, just ignore that. Just do what the chart says. Right? And then they all get like, they all have super big egos. Like they think they know what's going on and they clearly don't. Right? And they'll try and make arguments with me like, well, maybe you don't know what's going on. And I'm sitting here like, I've been doing this for how long now? 6 years? And you've probably been doing it for 2 months, bro. You know? This is like my everyday. Basically, it's a constant battle with the average retail trader arguing over who's more competent. When the reality is that you could be like super competent. Is it the word competent? You can be extremely competent in trading futures and still lose money overall. It's just that hard of a game. You know? That's why we have to rely on like the empirical evidence to understand why the market does what it does.
Administration official, US and China official talks are extended and substantial.
Yeah, those flows just turned around so quickly, man. It's less frustrating to lose $10,000 trading than it is to get into brain bites at Reddit. Well, I use Reddit because that's the easiest example. The reality is that I feel like I get this from all sides everywhere all the time. It's really quite annoying. I don't know if it's like a non-neurotypical thing or what. Did the market react directly when you got news from the news squawk? I haven't seen too big of news this morning. The cryptocurrency market does seem to be reacting to some headline with Binance, although I think that was not like, I think when we saw the initial down move overnight in the cryptocurrency world, that was it leaking out. That Dunning-Kruger effect on most social media platforms. It could be. That's why I was kind of wondering earlier, is the stuff that I see on TikTok when people argue with me on TikTok, is that a result of Chinese interference? Because a lot of the comments that I get on TikTok really perplex me. Like, I'm just like, how did you not watch the video? How can you be this dense? Like, so I made a video explaining the difference between cost push and demand pull inflation, and basically saying when you come in and you make the argument that corporations are being greedy, what you're arguing is that this is demand pull inflation. And one of the first things that you would expect to see when you see demand pull inflation is, because consumers have more money, is companies start increasing their prices. And that was basically the gist of what I said. I take it a step further for you guys this morning. It's kind of the prisoner's dilemma for companies, right? Basically, you can sit there and you can say, okay, all companies, if nobody does anything, then everything just stays the same and everything's fine and there's no inflation. But if one of you decides to raise prices, you'll get out ahead of the coming inflation and the rest of you will be behind. Then what's going to happen? people are going to immediately start raising prices because they know that somebody else is going to. And they know that the longer they wait, the more compressed their margins are going to be later on, right? Like companies aren't doing well right now, right? Maybe they made money in 2021, but they're not doing very good now, right? Demand pull inflation. And then I get these comments on the video that are like, or maybe companies are being greedy. And I was like, did you not watch the video? Like, your comment is just a reflection of the comment that I was responding to in the first place, and you didn't say anything different. Like, what is this commenter thinking? They didn't see the original thing that I was tweeting. I don't get it. How can you be that dense? You know? That doesn't make sense. I get some of that on YouTube sometimes, but on TikTok, it's like every comment, you know? And here's the other thing that irks me is that I guess I don't explicitly say the message, but I feel like everybody misses the message. The message is that your problems are mostly problems dealing with systems, not people.
By $1,
right? Here you have a system. It's a game theory system. It basically guarantees that you're going to get inflation. So you can try and be all altruistic all you want. Say we just need to get the right person in office. If Bernie Sanders won, then we would be able to get beyond the corruption and blah 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 blah. No. The reason you have these problems is because they're problems with systems, right? Why is that the message? Because what we do here, what we learn here, what the channel does that is unique is we understand market microstructure. We understand how the very rules of the game lead to certain stylized behavior. And you can take what we know about market microstructure in markets, and you can take those same things and go and apply them to politics and the economy and so forth. The political establishment, the economy, they're going to act in certain ways because of the rules of the system. And if you want to change that, you need to stop relying on somebody coming in and doing the right thing and create a system that is carefully crafted to create the right outcome. And everybody just wants to insist on, well, if my candidate had won, you know? It's higher volume on the March contract, ET Ranger says. Yeah, it does seem there's definitely more activity, and especially now that they've opened up, definitely more activity in the March contract. I'm surprised that there's any activity in December at all, but December is still going. Well, I got out my order at 353. I'm kind of looking at it like
gains in the S&P 500 following the market open here.
It wasn't a bad spot. It actually still kind of looks like an okay spot. Maybe the treasuries do turn down and I regret getting out of it, but I'm not a fan of this action, so I think it's probably better for me to stay on the sidelines a bit. Maybe some short trend comes in and we get forced back in. McLaren F1, post all your snow photos here in this thread. Everybody's gotten snow. You guys all got snow too, yeah? We got a lot of snow here in Utah. Two-month low in February hog futures. That's interesting. That's one that I don't really look at or get. Anyways, but the thing I keep coming back to is like Is China putting their thumb on the scale? Are these political actors kind of manipulating people? Is the general public that stupid? Or am I dealing with an issue where my brain just works differently from the rest of the world's, and people can kind of detect it and don't stick around or listen because of that? Because they go, oh, there's something off against this guy. I must be smarter than him. So that picture that you gave me there, Lucas, something I think is really weird is I've seen so many people, and even like on like people on podcasts and stuff like that, like they were asking the guy that made this algorithm about like the implications for markets, right? This one is, I think, is so funny, is because they're like, oh, how can a market function when everybody has access to writing any kind of algorithm that they want? And I just laugh because it's like, we're already there, man. That's always been this market for the last 10 years. The markets, the robots have dominated. Where have you guys been? Doesn't change a darned thing, because the institutions have already been using these, much more advanced algorithms than anything that ChatGPT is going to write for you, right? And it doesn't take very much for them to completely dominate a market. Look at that. Look at that. It's probably also like 1% of the code needed. Not really, Uzi. So the issue is, you can ask it to, okay, so we got to go back to, people don't understand how the algorithm even works. So let's explain how the algorithm works. When you get on your phone and you type a word, and then it will give you a prediction for what the next word is going to be, right? And you can just keep doing that, and it will write out a sentence. And usually you get like really weird, nonsensical, sentences when you do that in your texting app, right? Okay. So what ChatGPT did was they took that prediction algorithm and they added a reinforcement mechanism to it. They literally had humans look at the responses that it was giving and saying, yeah, that makes sense or not, doesn't make sense. Okay. So that's like the main innovation that ChatGPT is doing. And then they're adding on top of that some other innovations that came around 2 to 4 years ago for chatbots, to make chatbots that remember what you just said to it, and being able to like take a subject and combine two subjects together and stuff like that. Okay, so that's how the algorithm works. So when you come in and you tell it, okay, write C# for some algorithm, right? It's going out there and it's looking at all of the other code that it's ever looked at and combining that together to determine, what this most likely looks like. Okay, so it doesn't understand the code at all, right? And what you will most often find is if you take that code and you put it into a file, that it won't even compile, is what I found most of the time. So you get where I'm going. So like you it might help you in some situations, right? Like people have that code assist thing where you type in you type in a comment and it say code to do X thing, and then it tries and guesses what that code should be, and then you kind of modify it from there, right? So it kind of ends up being a tool that if you already know how to code and you can verify what it does and you can fix the problems in its code and stuff, then it ends up being useful, right? But it doesn't understand C# syntax at all. It doesn't understand that what it's giving you won't compile, or really even what it does. It's just trying to use text prediction.
A 5 billion cubic meter floating gas terminal in the Netherlands.
So, and then what happens is everybody on social media has picked up on that was like the big thing last week, right? So they're all hyping it up. even though they don't really even understand how it works, right? So it's way overhyped. And especially in terms of the impact on the market, it's like, we're already there. Markets already dominate this market to the point where, like, practically all statistical inefficiencies have been removed from the market, and it's nearly impossible to make money from that. Can we discuss ES Dome in the upper left screen and the trades based on? Well, so I don't regularly trade the ES much anymore. One thing I would note is that I'm using tick compression on this. So the minimum tick size on ES is 1/4 of a point, and I've done 4 tick compressions so that I only get a level each point. Okay. I don't take a trade just based off of what I'm seeing on here, right? I need to have some other kind of predictor of order flow, right? So if we come back over here to the treasury, I'm looking like, okay, I think that people are going to be hedging themselves going into the FOMC meeting on Wednesday, and that we're going to see a gentle rise in rates, right? So I'm looking for flows that are supportive of rates rising and treasuries falling. And if I can find a spot where I can like pick someone off, hit in with a market order, and immediately have a bid behind me, that's what I'm going for, right?
So seeing reports that India and China.
So it would be the same thing over here in ES. It's just that in ES, you get a lot of noise along with it, right?
So again, A&I earlier, citing sources, did say that an altercation between Indian and Chinese troops resulted in minor injuries on.
For me, I'm more interested in just what the S&P 500 is doing generally. So like right now, doesn't look to me like the S&P 500 looks super directional right now. It kind of looks like it is still tight volatility in ES and choppy again. So that doesn't help me take a trade, right? If the S&P 500 was like rising really, really high, like if it was a really solid uptrend, then it might make me more confident about coming in and selling the treasury. So that's why we have it up, because there is correlations with all of these markets, right? Well, by the way, on that move, the 30-year did fall all the way down, but the 5-year was actually pushing up. So we did get a little bit of steepening. And we're actually as steep as we've been all morning. Funny how quickly that shifts. It was like as soon as I said, well, it seems like the only real theme here this morning in the treasuries is that we're flattening. And then as soon as I said that, they stopped flattening. But anyways, the temptation, you got to understand that the way that we're wired is we want to see something happen over here and say, this is a pattern. That means that it's going to continue up. Most such inefficiencies like that have already been taken out of the market. So you got to be really careful with that and kind of look at it more as like tea leaves, right? It's like, well, okay, that was a strong uptick. Okay, there's not really a whole lot of interest in continuing to sell at this particular level. Right. So I don't take that as I'm going to take a reversal. But if my larger predictors of order flow say that we're supposed to be buying, then I might buy it there, right? So I got out when we were at the high there and I scratched my trade. It kind of looks like, though, that I could have held on and I wouldn't have gotten the adverse excursion and I could be getting out at plus 10 at least. That's a little frustrating. What do you think? You think I was too finicky? No, we don't have a predictor of order flow indicator. You probably could write that. Or I would say if you work for Goldman Sachs, you probably have that, right? Because in their analyst reports, they're constantly putting stuff out like that about, although it's usually a higher time frame, but they're usually saying like, here's how much money we expect to come from this sector of the market this month, and this is how much we expect to see come from risk parity funds and from stock buybacks and et cetera, et cetera, et cetera. And they listed in billions of dollars, and you can combine all of those things together to get a net, like what predictor of order flow. That is how you do it, right? But I don't think that we have enough data. So we kind of have to guesstimate it a little bit on our part, right? We're given advice by two pit traders to look at footprint charts. My approach to this sort of a thing is, if somebody doesn't provide empirical evidence for a particular thing, I really don't care who it is or what they're saying, right? Like, you might have somebody that 20 years ago used footprint charts and had some success with it, and like the thing is number one, you don't really know how successful they actually were with it. Maybe their edge was coming from the other things that they're doing now, right? Or maybe they're just lucky. I mean, it doesn't sound like they're still using footprint charts. They're doing something else, right? So that right away is kind of should make you wonder a little bit, right? So unless they can point to some study or some behavior that you can really verify that would provide you an edge, it doesn't really help you, right? Whereas I can come in and I can say, I can explain quite effectively. Well, I mean, I think that you have to go through a lot of information to understand why this is, but I think it's pretty well proven that the market is more statistically efficient than it is informationally efficient. I think we've proven quite well. The research indicates quite clearly that orders have very strong impact on markets, and that really you need predictors of order flow, because it's that set of new orders is what's going to determine where the market's going to go, and the past action doesn't predict what those future orders are going to be very well. But other things do. I want to say, look at this action and say, look, see, I was right. I didn't have the fortitude to stick with it, but it looks like my prediction of the order flow today is turning out to be true. I think we need to go a little bit further before I say that, but. Well, you can add the footprint. The footprint is overall useful, I think, even if there's not like an explicit edge in it. I think that a footprint chart does have some use because it allows you to analyze what the flows have been over a longer time period, right? Well, if you can see the regressions, especially on newer data, then that would be useful information, right? The other issue here, though, is what's the setup that he's talking about, right? Because people can use a footprint chart in many, many different ways. You know, one of the things that most footprint followers are interested in is unfinished auctions. I've gone and I've done studies on that, and I don't think that it has an edge. The data that I obtained suggested that it was worthless. Well, here we are at plus 20. I think I did the right thing by scratching the trade, but man, this is really frustrating. I don't know if I really should have stuck with it or not. I just man. I think the thing that ends up being the most frustrating in this kind of a market is like you get a move just like all at once, right? It's like you could be sitting in it for an hour, 2 hours, frustrated that it's not going anywhere, right? And then if you miss that 1 minute where it actually moves, then you're stuck chasing. I just don't understand what some retail trader guys are doing. I had a discussion with some guy the other day where he claimed algos were being employed to fill the gaps and proceeded to argue gaps work when in actuality the data says otherwise. Well, it is true that gaps are extremely likely to fill. Like on a daily basis, you get a gap on the S&P 500. It's extremely likely to fill. I wouldn't make a trade from that, but the gaps are extremely likely to fill. In fact, I did a study on this once with treasuries, I think it was, and I think that I found one instance. I think I found like 1 or 2 instances where the gaps didn't fill. It was like, if there's a gap, what is the probability of it touching the previous day's close before the end of the session? It was like, or at any time in the future. It wasn't on a day basis. I think I was doing it like it will eventually fill. Yeah, highly likely. Does scalping really make a lot of money in the long term with order flow? So any kind of day trading is, there's a limited amount that you're actually gonna make, to be honest with you, Yibo. So the big money is definitely in like managing portfolios, being in the market for a long time, etc. Okay, but somebody has to scalp, and I kind of think of it as more fun. I don't think most people, I mean, you can get lucky, but most people aren't going to make millions of dollars from scalping. Tell that to the guys still waiting for the gap to fill at SPX at 100. Well, certainly if you came, I think that where you come into an issue with this as a trade, right, is like, if you come in with the theory gaps tend to fill, right, that doesn't take into account anything about how long it takes to fill, how far it's going to go against you before it does fill, etc. So yeah, the gap does tend to fill, but the amount of risk that you would have to keep on in order to make that trade is not worth it. It doesn't make sense as a strategy.
$235 trillion in 2021, still 19% of GDP above pre-pandemic levels, according to the IMF. This is a total public and private global debt.
I agree. I mean, the bigger thought here, Lucas, with this is, as I would always just think of it from the perspective of orders move markets, right? All orders move markets. So you come in and you sell the market in order to get it to a spot, okay, and then you get to the spot. Cool. Now what do? You got to take that trade off. You've got to buy it back or whatever it was that you did. And if you do that right immediately, then you're just going to move the market even more than when you moved it to the original spot. So it's not a net profitable trade unless getting to that spot somehow triggers so much volume that it allows you to completely unwind your trade, right? So all of these ideas that you generally get from retail traders about how that, how market manipulation works is kind of based on flawed premises.
Extending their gains,
right?
with WTI futures rising by $2 a barrel now.
How can I manipulate the markets? Like what would be the smart way to do it is change my bids and offers to make it easier for it to go one direction or the other. Okay, I think that the reason we might be moving is I'm seeing stuff from the IMF. IMF says total public and private global debt fell to 247% of GDP in 2021 versus 257 in 2020, biggest drop in 70 years. Global total debt reached record 235 trillion in 2021, still 19% of GDP above pre-pandemic levels. 4 percentage point drop in global public debt to 96% of GDP was largest in a decade. High inflation will continue to reduce public debt ratios in 2022, but government should use fiscal policies to reduce inflationary pressures. Managing high debt levels will become increasingly difficult if economic outlook deteriorates further. So the IMF is kind of saying things that I think would be supportive of higher rates. That sure moved, didn't it? Like I got a pretty passive fill. And it's still going. I am seeing a little bit of chasing here. And a spot where maybe the volume might come back on itself a little bit. Well, you understand what I'm saying, Lucas, right? It's like the average retail trader doesn't understand that any of these properties, so they're constantly misinterpreting what's going on, and they come up with all of these ridiculous theories about what's going on that, you know, when you actually understand the science behind it, are kind of silly. And right, a lot of the conversations I remember having with you really early on when the stream was still fairly new, when I kind of understood this, but not from an empirical perspective, right? I said plenty of things and had plenty of ideas about this sort of stuff that were nonsense, right? And the only reason why we're able to come in and be confident about this is because there's such a overwhelming body of evidence about this fact. It's the mumble rap song. It seems like we do get through the whole playlist every day, don't we? So we get the mumble rap. Was that whole move really because of the IMF? Well, I think I'm going to take it right there. I think from some experience and having a true understanding of order flow, things like volume, liquidity, volatility, etc., you mostly just spot BS without needing much evidence. Yeah, well, so let me see if I can make a couple of or try and use what we do know to make some observations about the order flow. Okay. Market orders have very strong impact, and when you come in and you get a really strong flow of orders coming in one direction, price tends to move with it, right? But it's very hard to predict those market orders. Okay. So if in the absence of that, what would be the next important thing to look at. And if you wanted to manipulate the markets, right? Coming in and buying a ton of it and then selling a ton of it, that doesn't work, right? We know that because of the inverse sine law and everything. That's like a net. It's a net negative trade, right? So if you want to do something like that, you're going to have to be putting liquidity out there and be modifying your liquidity. When the orders are coming in the direction that you want, you pull your orders so that it's easier for it to tick in the direction that you want, right? So really, seeing orders cancel is a really important factor. It's one of the most important things that you want to see with your order flow, especially when in the absence of a strong flow of market orders in one direction, right? Today, I felt like it was like I got into a trade and then it would sweep up the other direction on nothing. It's just the orders would pull. That to me is like the market maker is doing that because they have inventory in this direction and they're trying to squeeze you, you know? And it was doing that up until the point that some real flow came in, probably this IMF thing. They came in and got everything to sell, right?
At 1 p.m. Eastern Time, the US is due to sell $32 billion in 10-year notes.
I wanted to come in here today and make at least $10, and I did. So I think that might be it for me today. Now that we've had this move down, and it does appear, at least from the movement in the 5-year, that we are getting the retracement of some sort. Possible that, you know, we move to another low and then snap back to this area again. But we should just acknowledge that the easiest flow came through, and it can be difficult and choppy from here. Big icebergs in ZB. Okay, which, well, okay, so I do see the iceberg at 07. One thing I was noting was that there was like a big bid at 04 for a bit, but it's not there anymore. I'm trading the micro futures, so it's just $1 per tick, right? So I lost 13 on the original trade, which was really kind of a shitty trade, and then I made 26 on this one, so it was net 13. Can you believe, though, if I had not gotten out of the second one, because I was long from 353. Now we're at 7.6. That would have been $40. Would have been $45. That would have been a really awesome trade. You know what, though? If I had held on to that and everything, it would have been really lucky, because yeah, I mean, 26 is not too bad for treasuries, but we're probably going to move way more than that later this week, right? But, you know, I was generally coming in expecting some hedging for the FOMC and stuff like that. If this was actually being driven by that IMF comments that we just had, I had no clue that the IMF was going to speak today, and I would not have said, oh, this is definitely a sell the treasuries based off of what I just read there either. So it would have been luck and risk management. And I guess today the reason why I was able to come out on top was because I did have some good risk management. Oh, it looks like I could have gotten a 30. That's okay. I do think that they could push a little bit lower. We just got to remember that things tend to get a little bit more difficult from here. What do you use for your data connection? I am using Rhythmic. I have a video kind of about the setup and why I have my setup the way that it is in terms of data. It's called Rhythmic versus CQG data. Oh, look, it says closing your platform too. Okay. See, it was the 76. Oh, 78. No. Last bid was 76. 76 was where I got out, and I was looking for like 581. So that still wouldn't have been filled, but the 30-year did go lower there briefly. That suggests to me that there is a liquidity hole here at 04, right? So like if I really felt strongly that we were going to see continued selling today, I would really want to sell it above 04 because there's going to be a tendency to come back to this spot. So if I can get it above that, that's going to kind of help me a little bit, right? That might give me a little bit of favorable excursion. And then if they go, they go. And if they don't, they don't. It makes it a lot easier versus if I sell it down here at 03 half, you know, then I'm constantly fighting against this tendency for it to snap back to 04. Right? That's why the liquidity hole matters. You know what else is in this situation? I think that a lot of people would be looking at the chart and saying 04 half is resistance. But I don't actually see that. I haven't seen a whole lot of volume go through at 04 half. And look, they just ticked up on that and it didn't show anything unusual on that uptick. So it could probably shift back, maybe even all the way back up to the open, possibly. If there's a strong enough buy flow come through. So I don't actually see the resistance coming into it. I think that it was like the market orders came in. Now they're stuck. I think that flow is done. I don't think let's just run with that it was the IMF. If it was the IMF, I don't see any reason why that would continue to drive flow, right? So that means that if we go back to a balanced flow, you're more likely to float back up a little bit because it's going to be a lot easier for them to tick up than it is to tick down, at least below 04. Right? Because the liquidity is damaged all the way going back to probably 08 half. I'll be right back. I hear a baby crying and it's bothering me. Anyways, the whole point behind all of that was a lot of the things that we know and the systems that we have in place helped me out here today, but luck was the biggest factor. Right? Luck was the biggest factor. It'd probably be advantageous for me to come in and be like, see, this is proof that Seth knows what he's doing and he's the best trader ever, and etc, etc, etc. But I came in and did that. I don't think that I would be helping you guys prepare you, because tomorrow and Wednesday are going to be nuts. And that's what you need to be prepared for, right? And this is a small little battle compared to what's coming later in the week. That's why I'm saying that. Hopefully the flows that we get later in the week aren't so tricky. So I'd say that this flow this morning was pretty tricky.
In their gains, Brent crude now rising $2 a barrel.
By the way, who was it earlier that was new this morning? Sophie VW. I hope that you still have that long in oil. Because oil is like just really taking off this morning. Like when we were looking at that, it was at 72 and now it is at 73.4. So that's like a almost $4,000 trade on one full oil contract. $400 on a micro. That's a really, well, I mean, every move in oil is a lot these days, but it still would have been a good win.
Looking at the fear and greed index, 54 out of 100 indicates neutral, and the crypto fear and greed index, 27 out of 100 indicating fear.
I called buy oil at 69. Remember, too bad it stopped at 70. Yeah, it wasn't because there was a little bit of selling first before it really took off, right? Ooh, look, the treasury's flipping back down hard. There was a little bit of flow behind it too. Now I'm looking at this, and the concern I have now is I did the right thing for a scalp, and that trade worked out incredibly well. But now I'm worried that this is the one that's just going to run and run and run, and that I'll look back at this at the end of the week and be like, if I had just held 3.53, and I'd be, you know, we end the week at like 3.9. That's what I'm worried about. There is definitely still the liquidity hole at 04, even though there was that strong sell flow came through. Yeah, when it ticks down in the 10-year, the other two follow it and just kind of slump. So the sentiment definitely shifted. Like, there's not very many people looking to fade this. I don't know if it's worth being in at this point. That's going to be volatile, but I don't think that I'd be looking for a reversal on this one. At least if we did get a reversal again, I think probably the most that we might be able to get is 08. We got to what? 055? That actually wasn't too bad, but jeez. Let's come back over here to Zero Hedge. Do they have a story about that? FBI admits it has more information on deceased DNC staffer Seth Rich. Oh boy. Trump reveals he rejected offer to trade the Merchant of Death for Paul Whelan. But not much else other than that. Oh, and then the net energy grain. So this one is really weird. Remember on Thursday or Friday, I was saying, no, they've made like more energy than they've put in, and I was like, you know, there's stories about it. It sounded like that was kind of tepid, but you know, it's been happening. And then we get another story about this that comes through today. That U.S. scientists made a net energy gain. It's kind of weird. Still a lot of volume at 04. You know why? Part of why I think that liquidity hole is such a big. I mean, I think that it really is one of the most useful pieces of technical information you can possibly have. But I think I focus on it particularly because that's always the spot that I would find myself stuck. Is like I would be late on a trade like that and get in right when things are getting crazy and be short at 03 half and constantly having that 04 hanging over me, frustrating me, right? Life is so much easier knowing that that's the spot and just being like, well, maybe it's possible for it to go lower, but you might see like it go lower and then snap back to 04. Usually this place is not worth messing with. Not until like 8:45. What do you guys think the high in oil is going to be today? Should we put a couple feelers out there? We'll start at 73.5. So right now it's at 73.5, 74, 74.5. Oops, not 7, it's 47, 74, 74.5, 75 or higher. This should be an interesting pull.
According to an EU diplomat, EU member states are moving in the right direction on a gas price cap, but we are not there yet.
I think we should make today's title Seth Just Lucky, I guess. That's how I feel right now. Yeah, getting another little buy coming through here. They're at the top of the range again. Okay, so where are we at? Only one vote. Come on, guys. There's one vote, and he thinks that it's going to go to 74. So I guess if you all agree that 74 is going to be the high of the day, then there's no reason to vote. But EU member states are making progress towards a gas price cap, but we are not there yet, says EU diplomat. Uzi's just guess. I mean, aren't we all just guessing at this point? with a trade like that in oil, it's kind of one of those, like, I think that you could have come into the oil market today and predicted that the made the what is the words? I'm struggling for words. What's my issue? Man, being ADHD really sucks sometimes. I think that you could come in here this morning and have figured that your predictors of order flow were long in oil, but how far would that take it? You know, there's a certain point at which it's like it becomes impossible to know how far it goes, right? This is like here in the treasury, like I know that there is a liquidity hole at 04 kind of holding them back, but like, is that actually the low of the day? There's no way for me to know. I just kind of have to sit here and wait and see, like, in 15 minutes, does a block of cells come through or something like that. In oil, all I know is I want to see the limit orders at 70 and below. We kind of touched Biden's price, but we never really sat down there, did we? It kind of seems to me that Biden shouldn't have said anything, right? And maybe it would have gone lower. So riddle me this. Who do you think has access to intraday actual short positions? I don't think that there's really a true way to know. Like, even the prime brokers, you know, would say that they can't calculate that precisely on a stock, let alone future. That's why you get the commitment of trader report at the end of the week, and you only see what the positions were the week before, right?
Seeing that China files a dispute at the World Trade Organization against the US chip export.
Only way to know is from the exchange, and the exchange only gives that information out on a delayed basis. And if they were giving it out to anybody else before that, it would be a huge scandal, right? Anyways, riddle me this. The headline from the IMF was, governments should use fiscal policies to reduce inflationary pressures. Right? So first of all, They're totally right. They're 100% right. The frustration that I've had is that we're not seeing any fiscal policies to reduce inflationary pressures. They've made some laws that they try and masquerade as reducing inflationary pressures, but they're really not, right? It should have been like, well, for one, supply side stimulus, not taxes, but like, you know, funding shovel-ready projects that help infrastructure, right? A little too late for that now, though, right? What else can they be doing? There's another thing that they should be doing, but I can't recall. Oh yeah, you need to cancel this student debt forbearance thing, man. You know that it's like 0.2% per quarter that they have that open, that contributes to inflation, if not more than that. Just saying, low-hanging fruit. These sorts of things, right? But if governments were to come in and do things that would help reduce inflationary pressures, right? Wouldn't that mean lower interest rates, not higher interest rates? Would mean, oh, okay, because we're getting more fiscal support, the Federal Reserve doesn't need to do as much.
US export controls on Chinese
right?
ships hinders trade.
That's what you would think it would be. But we sold. I guess because IMF is still concerned about inflation. I don't know. I'm not 100% sure I understand why that flow came in the way that it did. Cancel student debt. Students, well, so you got to remember, this is man, let me tell you something. I had one of these epiphanies last week. I kind of already shared it with you, but the more I think about it, the more I'm like, this is a significant change in mindset for people, because I feel that people dislike the central banks because they say, well, I wish that I could just print more money and pay for everything on, you know, with that. And the reality is that you can print money. Anybody can. Anybody can print money. It's just you have to do it through the bank, right? But the bank doesn't just make doesn't just do it for themselves. Like seriously, the bank, they print money and give it to a borrower, and then the borrower pays it back over the course of 10 to 30 years, and they make like 1% per year on it. Like, are the banks really getting the deal out of this? No. Who benefits from this system that we have? People who borrow money. Well, people who borrow money and are able to make more money with the money that they borrow, right? So successful businesses are the ones that really benefit from this whole situation. So the whole approach that you got to think about it is anybody can print money. You have to print it at the bank. And the bank will only let you print money if you can show that you're going to be able to pay it back. And that's how it works, right? And a lot of people think that it's a fractional reserve. Like, okay, if you go and you put $100 in, then they can only lend out 90% of that, and they have to keep 10. You know, if you put in $1,000, they can only lend out 900 of that, and they have to keep 100 of that there at the bank. But it doesn't work that way. They just keep all $10,000 there at the bank, and then they can go and lend out, $90,000. Or sorry, 9,000, because you put in 1,000, so they can then go and print $9,000 and still keep their reserves, right? So they don't have to have the deposits. The banks can just print it anytime that they want, right? So when you come in and you do student loans, money is being created by those student loans. It goes out into the economy, it goes to the schools and stuff like that, right? And then that money that debt has to be paid back slowly over time. So if you have loan forbearance and nobody has to pay those back, then that means that you just put a bunch of money out into the system and it's just staying there. That's inflationary, right? Wonder how printing works when Russia wants oil payments in gold. Well, when it happens, we'll deal with it. I think that the United States has a lot of problems. It seems to me that since Joe Biden has gotten in office, like this is the thing that is mind-boggling to me, okay? Is people were saying, you know, people aren't going to trust the United States anymore because Donald Trump is crazy and he's hurting all of our allies and things like that, okay? But nothing too bad actually happened when he was in office. And then Joe Biden gets in office and like immediately everything falls to shit. Right? I think the biggest issue here is the Saudis. Is that he's like, well, I hate the Saudis, and so the Saudis are like, well, if you're not going to be our friends, then we're going to be friends with everybody else. And you look at it now, and you kind of have to wonder, like, is it worth it, Joe? Is it worth it? Because it seems to me like the world is in a worse spot. But I tell you what, wouldn't the time for all this stuff to have happened like a long time ago? Like I keep hearing this whole thing about how the dollar's gonna collapse and yada yada yada, and Russia's gonna put something up. I don't buy it. Like, look, are you gonna go and put all your money, give all your money to Russia? Right? Like, are you gonna be the one that's like, oh, I'd rather have the gold than, right? If you had oil, if you were selling oil, okay, are you going to be the one that's going to be like, well, instead of selling to Western countries that actually still have some semblance of law and international order going on here, I would rather sell it to Russia and get the gold? Is that going to be you? Who's going to do that? Because it ain't going to be me. I'm not going to be the one that does it. You get what I'm saying? All I want is to have tenured professors to have $1 million salaries so that I can throw Peter Singer at them and tell them to donate everything above $36,000 every year. It is kind of another thing though, which is like here in trading, one of the things that we want to do is we want to follow where the money is going, right? So in the US economy, where is the money going? Healthcare, academics. Like I was thinking, you know, it's also technology, right? So I've been saying this whole time. You know, if you want to improve your station in life, you feel like you don't make a lot, especially you have a working job. Excuse me. The play is learn to code, because there is nothing that makes you more compared to the amount of effort that you have to put into it than technology.
Cap could cut European gas market liquidity, and
you're probably wrong. Probably the ones that are getting the best
this year
outcome out of their initial investment are school administrators, university administrators. The real play is to get to the top of your university management hierarchy, and that's the person that's making the most money compared to the amount of value they're actually putting into the economy. I think. Just a theory. I'm just kind of throwing that one. I'm not going to be like that's like my position for sure, but that's kind of the thought that I'm having right now, and it seems to make sense. And I will continue to explore that one. No, that's a terrible idea. Whoa. Okay, wait. There's a couple of comments. The only charts I have used are line charts and candles to look fancy. Oh wait. A couple questions regarding bid, ask on footprint or order flow charts. When a short is placed, is it showing up on the ask side of the footprint or the bid side? Oh, okay. So if somebody, it depends. You're not seeing whether somebody is long or short there. You're seeing whether somebody, which side was the aggressor, right? So if somebody was market selling, then it's going to show up on the bid side. The number is going to show up on the bid side, right? Market sell is on the bid. That's just the way that it doesn't tell you if they're opening or closing a position, if they were long or short. You can't sort that information out. You can only know what the aggressor order was, right? So I can know what the aggressor is. I can't know whether it was opening or closing a position, or whether it was whether that position was open or was long or short, right? Because I can see that it's a market sell, but was that a market sell for somebody that's entering a short position now, or was it a market sell for somebody exiting a long position? There's no way to know, right? Like, the whole thing is you want to game that sort of stuff out so that you can say this is the point at which certain people are going to start panicking and lose money and get out, right? You can't know that. That's why you just need to try and predict the next set of market orders instead. So degree in mass communication from a brand name uni and join the administration at the same university after graduating. Yeah, exactly. That's what I'm thinking. Okay. So Lucas was saying, I want to begin with C++. How wise is that? It's a terrible idea. I know you can do it, but your opinion is important. I know the fastest language around. If I want fast execution, I also want to make my own DOM for crypto. Okay, so here's what I would say about that. Because what you're doing is market-based stuff, the thing that would be the most beneficial to you is Python. Straight up, it would be Python or C#. If you have NinjaTrader and you want to write algorithms in NinjaTrader, then just do C#. Okay, but overall, the thing that's going to be the most useful in learning algorithmic trading is Python, without question. There's so many more samples, and like, this is what the industry uses, is Python, right? Like a really common thing at a firm, like a quant trading firm or hedge fund, that sort of a thing, is they have all of these algorithms that use Python, and then they're trying to squeeze a little bit more out of it, and then they realize that we need to convert our Python code into C++, right? But almost everything starts out as Python code, right? The thing is, but what I'm getting at here is that the benefit of doing it in C++ isn't going to come for you until much later, right? The having it done in C++ is only going to be beneficial to you after you've been having a successful algorithm for many years, right? So that's the first thing. Okay. The second thing that you need to understand is that programming in C++ or Rust is very different from any other kind of programming, because you have to deal with actual memory management issues, which are actually quite a complicated thing. And so the things that you spend most of your time dealing with in C++ are things that you simply don't deal with in other languages. And that makes it extremely difficult for your first language to be C++. You're spending all of your time trying to learn the memory management things instead of just programming, right? Like Rust is a cool thing for me to get into because I've been programming for 2 decades now. Right? So yeah, do Python. Exactly. Start with Python and then optimize with C++ if you eventually want to. Exactly. See, like for me, if I wanted to make a new platform, right? And I was really going to dump money into it and everything, I would really like to do it in Rust. But there's some big kind of trade-offs and what is the word, downsides to doing that, right? Like there's a reason why Sierra Charts is like the only major platform. I guess trading technologies is C++ too, isn't it? But there's a reason why most of these other platforms are not C++. Okay, like it's harder to do. There's less engineers to do it, right? So for me, if I was pitching to angel investors and I said, okay, here's the platform, here are the existing future platforms, here are the features that we are going to add that we think is going to differentiate us from the rest of the industry, and we think that we have this start that we can have with the marketing bit because of my existing community, right? And we want to write it in Rust. That's going to be one of the big advantages, that it's going to be written in Rust. That would be a really big stumbling block to getting funding, probably. I mean, it could still work, but that would be like a big risk factor. Because are you going to be able to find the right engineers that can write this in Rust, etc., etc., etc. Which is Excel would the base of Excel would be written in C++ probably. The big issue I'm having with Rust right now is that the ecosystem for GUIs aren't very good. So you really would be writing a lot of stuff on your own from scratch. Nick Timmeros with a story from the Wall Street Journal. The first phase of the Fed's rate increases was big, fast, and relatively widely supported. The second phase is getting underway and divisions are emerging. The outlook for inflation and wage pressures sits at the center of budding disagreements. The story from the Wall Street Journal, the title is "How Long Should Powell Keep Raising Interest Rates? Fed Officials Are Divided." That sounds like a buy to me. The market is not reacting to the initial push, but almost every story that Nick has put out has had some impact on the market. So I think I'm not a Wall Street Journal subscriber, so I can't go and read the full article. But just from what I see there, posted by Nick Timmeros, is would be dovish, would be them saying that they shouldn't be. Some people are arguing that they shouldn't be raising rates for as long as they want to, right? That's dovish. So C++ is the language in which the most famous platform is written. Cool. Yeah. Yes.
10 minutes time now at the top of the hour. We are due to get the New York
most serious applications that I guess it's not really the case anymore. But if I was working with a digital audio workstation, video editing, those kind, or Office, the really serious, heavy lifting applications on your desktop, they're probably written in C++. Now, for a DOM, so one of your first questions might be, shouldn't Jigsaw be written in C++ if we want to have the most stable and fast platform, etc., etc., etc.? Okay. Well, yes, that is an advantage to having it written in C++, but C# has a very, very highly developed ecosystem for data grids, essentially. And I mean, like, at Goldman Sachs, they were writing all of their stuff in C# for data grids, at least. I mean, there was a lot of Java, but like the GUI stuff, it usually ended up being C# or web, right? In other words, the advantage of having the GUI element that works really, really well outweighed the benefits of the extra performance that you got from C++. Yes, Jigsaw is C#. In fact, so if you come in here, let me show you. So if you open it up on your computer and you go and you find Jigsaw Trading, And oh wait, is it actually? There's a one in program files, isn't there? Jigsaw trading. Right? You see all of these in here? All of these DLLs. These are all of the libraries that they're relying on to use. I think, let's see here, CEF sharp. Open source web browser for WinForms and WPF. Dev Express is the one, I think. I think Dev Express is the one that we used at Goldman. Pretty sure. So I think you can come in here, products, WPF. I don't know if they did it in WinForms or WPF. WPF data grid. So I'm pretty sure that the way that they did it was they started with this WPF data grid and then they modified it to perform in the way that they wanted this to run. Because that's the way they did it at Goldman. So it's C#. And that's kind of the unfortunate thing about the programming world, is that having a framework that is well suited to your particular use case ends up being a bigger benefit usually than the actual properties behavior of your
Wall Street
language.
Morehouse did post out an article around 25 minutes ago. Just some prep ahead of the
This is why Rust is not. Oh, you know what? I shouldn't have that going. Sorry, it's talking over me. I would think that Rust would have like completely taken over, except for like its libraries are so immature. Like trying to write a program like Ableton in Rust sounds like a complete nightmare to me. It'd be super hard. I think if you want to be a serious programmer, eventually you do want to get into C++, but don't. I'm telling you, man, you're holding yourself back if you start with C#. You're just making the beginning harder for very little benefit. If you want to do algorithmic trading, do Python, because there are hundreds of Medium articles out there about programming stuff in Python, and the stuff that you'll get from Python will be like way more interesting use cases, like integrating machine learning and crazy stuff like that. Okay. And like real mathematical models. You'd be learning like real quant stuff. You go and you follow the Python tutorials. So I would use that. My use case is drawing circles and squares. That's why I use logo. So I can draw circles and squares in Rust, but I ran into issues like having a transparent interface and stuff. It wasn't working very well for Rust. Anyways, I gotta get going now. Is Python faster than C#? No. So, I mean, when we're talking about like performance here, we're in many instances only talking about microseconds or milliseconds. Okay. And also we might be talking about like using more memory overall, that sort of a thing. But C# is generally going to be a little bit faster than Python. because and there are ways to speed Python up that might make it in some instances faster than C#, I guess. But your default Python, because it's an interpreted language, is slower. Only black and white, not the colored. Yeah. You know what? When I was I was talking to one of the block traders at Goldman, I recall them saying that you shouldn't use colors. Yeah. That one of the things that they were on was to just have black and white charts and fill the candle black or white. And I was like, well, doesn't filling the candle kind of bias you too? And they're like, well, maybe. So it wasn't like they thought that it was like a huge deal, but that was one of the things that they were doing. Yeah, was they were using black and white candles that no colors, because color had too much of a psychological impact on you. Anyways, that's why I use orange and bright blue. That way, no matter what happens, it displays to your brain as a warning sign, this animal is going to kill you, right? Well, they use charts, but they didn't use charts to make decisions, right? It was like they weren't, yeah, no, it's definitely not being revindicated. So like the thing is that they would come in and they want to remember that like the market sold at this time of day and bought at this time of day and how much and that sort of a thing. But they were never going in and saying, because we made a lower high, I now want to go short, or because this candle came short of this price level, I'm now going to go short here, or because this candle was so big, I'm going to enter a position. Absolutely nothing like that, right? In fact, you have to remember that the game that this particular trader was playing was very different, because the decision to whether to go long or short had already been made for them ahead of time, right? So they had already made a deal with a firm, somebody that wanted to buy or sell a large amount of a stock. These were stock block traders, right? So they knew that they were going to buy or sell, and the whole question was, how do I get the best price for it, right? And so they were not looking at some technical pattern. I remember that she liked it if the girl that I was talking to, she liked it if you were getting bars that were kind of folding in on each other, you know, those kind of inside bar sort of structures, just because that was where she could execute the most amount of volume. Okay. But she wasn't using any technical signals. Their whole strategy was based on everything that was within their control, when they execute and how they execute. And how did they do it? They used the things that I've been teaching you, like Almgren, Chris, and information about the empirical behavior of markets. And I remember, like, this is the thing that I kick myself for, is I asked her about these sorts of things, like, so are there patterns? And she had said, well, yeah, there are patterns. Like if a stock goes up and then there's a flag and it goes up, that's my favorite pattern. Then there's like a real reason why the market does that. She didn't explain why. Now I understand why it does that. And she kind of said that it was like, you can't just say this went up and there's a flag, so you want to buy it. It's not that simple. But if you're doing the thing, then it will do it every time. Didn't understand it because I didn't understand why it does that. Now I understand it. I can teach it to you and I can explain why that happens, right? Like the patterns are real. It's just the pattern is the result. The pattern is what you're going to see if you're right. If the thing that you think is happening is actually happening, then you'll see that pattern, and it's 100% consistent. If you knew that Goldman was acting in that market that day, you would see the pattern 100%. Like almost like 95% of the time you'd see it, right? But just seeing one leg of the pattern doesn't tell you that they're doing that, right? So the technical analysis doesn't help. Anyways, I've gone on too long. I will see you guys tomorrow. Keep your hats on. Stay